Hello, my name is Erin LaGrassa with Money Matters AZ, and today I'm going to discuss with you what a profit and loss statement is and what it is used for. You can see here this is a basic profit and loss statement. Profit and loss statement is also called a P&L or an income statement. It's all the same thing, different words. So at the top you have your revenues, then you have your cost of goods sold. Cost of goods sold are costs directly related to a sale. So for example, if you have a cake that you sell, the costs that are directly related to that cake are going to be your cake supplies, flour, sugar, butter. Or if you sell a class, so that's a service, you're going to have direct costs of that class labor, the person who teaches the class. So we only keep these kind of costs in the cost of goods sold section, not expenses that are listed below like rent, utilities, office supplies, etc., because those are going to always be due no matter if you have a sale or you don't. So then after cost of goods sold we have our gross income, which is our revenue minus our cost of goods sold equals gross income. Then we deduct all of our expenses, and then we get to the very bottom line, which is our net income, also called net profit or net loss. So from our $37,000 in revenue, we made $3,300 in profit. Now, let's do an example. So today you sold a cake for $2,000 and you gave your customer net 15, which means 15 days to pay. And then next you called your supplier and you paid them $500 for those cake supplies. So you called them, gave them your debit card, paid $500 that day. Based on these two actions today, what will your profit and loss statement look like? So our income or revenue is $2,000 minus our cost of goods sold is $500. So our net income, our net profit is $1,500. Now, tell me then, if your bank account balance was $700 when you walked in your office this morning, and you made that sale of $2,000, and you paid the $500 for your supplies, what would your bank account balance be after you made the sale this same exact day and paid for your supplies this day? It's kind of a trick question, so try to think about this before I show you the answer. Just kidding. So basically, you started with $700. You made that sale, you sold the cake for $2,000, but remember, you gave them 15 days to pay, so you didn't actually collect any cash in your bank, but you did pay $500 today. So your bank account balance is $200. Your cash is $200. Does that make sense? I hope. Now, as you can see, our net income, our net profit, is $1,500. So we have 2,000 minus 500 equals 1,500, but our cash is 200. So there's a huge difference. I'll tell you, so many people ask, well, my income statement, my profit and loss says I have $50,000, but I don't have $50,000 in cash. Yeah, this is one small example. There's so many other reasons why your net income is never, ever going to match your cash. I mean, if it happens, that's just crazy. That's a rare occurrence probably, but most of the time it's not going to match because your net income, your profit and loss statement does not show you the activity of your cash. You look at your statement of cash flows for that, which we'll talk about in another video. Now, what is the profit and loss good for? Basically, it shows you, like I said, how much income, expense, and net profit or loss you have. And so that gives you your profitability, not your cash. I'm going to say that a million times because people still ask that question even though I explain it. But I understand it. If you don't have an accounting background, it's confusing. So, it's basically a historical piece of data. It's not the end-all be-all, it's just a tool. So it's everything that's already happened. So the sales that you made, the cost that you incurred, the net profit that you had. It's not like this is what's going to happen for the rest of your business. I mean, it's a tool to use, and you're going to assume that it's going to be like that, but you have to control it. So, what's the best use of the profit and loss? One, it will show you if you should increase your prices if your profitability is too small, because your cash, it's all tied together. Like say your cash flow is really tight and slow, then it might be because you shouldn't give somebody net 15. or it might be because you need to increase your prices because your costs are high, or you decrease the costs, or maybe you're not getting enough revenue because your price is too high, so you have to decrease your price. So you use your profit and loss statement to find out that information and make a better informed decision. So both increasing your prices or decreasing your prices and decreasing or increasing your costs and expenses, those will increase or decrease your profitability. That'll decrease or increase this bottom line of $1,500 right here. If I increase my cost to $1,000, I'm going to only have a net income of $1,000. I'm not going to have, I also will have less cash, but it's not necessarily something cash is not something that we're just talking about here. It is, but it's not. We're just talking about profit. Okay? The third and fourth thing is, when you know your profit and loss, then you can determine what your break even is. Your break even tells you when you're at zero. So you sell a certain amount and you spend a certain amount and you're at zero. You don't make any money, you don't lose any money. You're just at zero. You're coasting along, paying all of your expenses, but you're just not making extra money. Profit, cash, it ties in at some point, but we're going to just stick with the simplicity of the P&L for right now. So the other thing it tells you is your contribution margin. And your contribution margin gives you the amount of money you have left after paying your cost of goods sold to pay for your overhead, which is your expenses, your rent, your utilities, your administrative labor, everything, your taxes. That contribution margin and the break-even analysis are such amazing tools, and they will help you decide if and when you should hire a new employee or buy a piece of equipment or increase some sort of expense. You can use the profit and loss statement to determine and calculate these two aspects, break-even analysis and contribution margin. Both of those things will be in different videos because I don't want to overwhelm you again, but these are ways to use the profit and loss statement. I hope you enjoyed the presentation and that profit and loss statements are a bit more clear for you now. Thank you.